Hello YouTube! Today we're going to pick up where we left off yesterday in regards to the trap being set, and it's not a nice one. And today we're going to ask ourselves, who is most likely going to get paid tomorrow? And I say that because right now I think a lot of people are having some real pain. They are bulls who are trying to swim upstream, and they're realizing that, oh my goodness, every time I jump into the next pond, it gets more and more difficult. That is very obvious if you look at the tape today with an objective view, where there was a chance for the bulls to take it, and they failed. So now we're going to go through and explain everything that happened. There is a lot to go through. I'm going to try to provide my summary as fast as possible. In return, what I would really appreciate is a thumbs up. If you're new to the channel, I would appreciate if you could subscribe, and then drop me a comment. I would really appreciate that. So the most important thing we want to look at first is the evidence for the bears. So when we look here, we have a green line. Well, we notice that today, we gapped down slightly below it, basically on it. We pushed up, faded right at the high of the day. So we got to 396.2 yesterday. Today, we made it to 24 cents lower, 395.96. We got daily lows. Sorry, we got daily lower highs and lower lows, which means that we're making progress to the downside after a massive sell. So now we are closing below the green line, which means where we would expect to find buyers. They did show up. That's why we went to 396 basically. But then the bears are like, oh, thanks for the rip. Time to sell, time to sell, time to sell. And they took it all the way down. What was particularly notable to me is that as we zoom in here, we can note that as we started coming back down, I noticed a lot of liquidity around the daily lows, 391.9, 391.1. And that's just because those were previous areas of supply and demand. The worst thing for the bulls today is that we are closing below the last 2 days low as well, which means that we are the most bearish we have been this week. We're now also below our power pump, which the low here is at 390.2. That 390 area is so important. And the evidence right now is that the bears are really flexing. And I know that since Friday is going to be Opex, 4 o'clock close is the most important price, period, full stop. There was a ton of options gushing today. We'll look at that a little bit later in the video. But first, I just want to make sure that we set the stage for us to understand what is happening. I also forgot to mention that volume is also bumping up. So volume is bumping up as we are bumping down. That is classic bearish. So if we're fish swimming upstream and the bulls are still given enough evidence to dip their toes in, buy, and then get flushed out, which means rips are for selling, it doesn't look all that great. So what caused it today? Right, the stupid red thing that's underlined here, right? Team East, they met. We saw some headlines. They were not all that bad. They were pretty much what I expected, but these are rumblings or I think some groundwork being laid for things for the future. I don't want to talk too much about it because, frankly, it's a little bit depressing. We also had some other data out this morning, including PMI, retail sales, and jobless claims. Let's have a look at that. So over here, we got core retail sales down, retail sales up. We've got PMI down. We got initial jobless claims missing a little bit. What does this mean? Mixed data. And because Jerome is looking at the totality of the data before we have our FOMC meeting next Wednesday, I am going to be paying particular attention to this Friday number at 10 a.m. for direction, 30 minutes after the market opens. These consumer expectations are basically inflation expectations. Is it starting to cement into the average person's head that we need to be a little bit more cautious? And the reason I say that is because these retail sales were up, the core retail sales were down. And there's an easy way for us to look at this. It's a video from Bloomberg, which is on Slack if you want to go read it. U.S. retail sales rise despite inflationary pressures. Who is spending? I don't know. Drop me a comment. Are you spending more money right now? And if not, maybe it is a different group of people who are buying. So that's the first thing that I noticed. Next thing is that we already got Team East meeting. If there's more headlines, great. I did not really see it recycled too much. So as of right now, it is a let's be mindful of it, but let's not drop everything to be super scared. Second thing is monthly Opex. This is going to be triple witching, which means there's a lot on the line tomorrow. There's usually more than $1 trillion in premium that is on the line. For context, what does that mean? It means that the day, this is Tuesday, I think. On Tuesday, we wiped out $1.6 trillion in value, in market cap. However, there's probably about the same expiring in options tomorrow at 4 p.m. So if you were if you thought this move right here was really impressive, just wait till tomorrow. The fireworks are going to come. I'm talking big leaf fireworks. And maybe now, with the benefit of a little bit of context, you understand what professional time is. I've been trading for, I don't know, what year is it? 2022. I've been trading for about 14 years now, and what I really start to appreciate or respect a little bit more is that a humbling is usually right around the corner if you are not willing to dial back your risk. And on a day like today, going into Friday, if you understand that there's a battlefield where these guys have significantly more ammo, they got more information, they got more firepower. You're out there with a little pistol. You're not really going to move the needle. You're not going to move the chart up. You're not going to move the chart down, but you might really get destroyed. So if we know that there is building evidence for the bears, we're going to look at the weekly chart next. I just want to finish off the story. So mixed data. That's the theme for today. All right, now let's talk about maybe the reason why there was some fuel added to the fire today. Oh my goodness, right? Ray Dalio does the math. This came out, I believe, today. Yeah, September 14th, just before yesterday afternoon, just after the market close. I respect this man too, by the way. Ray Dalio does the math. Rates at 4.5% would sink stocks by 20%. Doesn't mean it's going to happen today, tomorrow, but again, this guy's smart. He's the hedge fund manager which has returned the most money to shareholders ever in the history of the world. This guy knows what he's talking about. He's a macro long-term investor, though. He's not saying tomorrow on Friday we're going to get a dive. So I respect Ray Dalio, and his numbers here are legit. He's also talked about the changing world order and had a recent update out about inflation, the economy, and everything. So I think this added some fuel to the fire today. This one here is from Steve Guggenheim. He is from, Scott Minerd. My apologies. Scott Minerd from Guggenheim. I showed this one on the weekend where he's calling for a negative 20 swift sell-off by mid-October. That's like 30 days away. Yeesh. All right, yikes. This guy's smart too. He shared this 4 days ago. So this is just over the weekend when I shared it. And then Jeremy Grantham, another seasoned veteran, legendary investor. Jeremy Grantham warns the S&P could plunge another 20% and reveals he's shorting the NASDAQ and junk bonds. So what level are these guys looking for? Let's do the math here. So roughly from about, I don't know, let's call 395. 395 times 0.8. They're looking for about 300. If we take the price from today for Ray Dalio, he's looking for about 300. So low 300s is what we're looking for. And that's important because it pretty much aligns with some of our bear market targets of 2022. I'll see if I can pull those up really fast here. So we got our bear market targets, and this is important because it's math. So when we look here, if we go down to 336, that would be a 30% drop. 339 is going to be our February 2020 all-time high backtest. We can also note that as we are right here at about 390, we are still above our 2020 high, our 2021 low, but it's looking more and more bleak. So now we're going to close these out, right? Spooky, 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 super spooky. Now on the flip side, we're going to look over here at the man who is more reliable than anyone else, Jim Cramer. Yesterday said, easiest call in the world. The bear market isn't over. I will talk about it tomorrow at our club call at noon. Ooh. Not too late to sign up. Click on my avatar. I think it means avatar. And they sent me we got a sale for Jim Cramer and his investing club. $100 off. Sign up now. So who's right? Is Jim Cramer right that we're going to go back up? Basically meaning what Inverse Cramer here is saying. Stocks fell negative 25%. And now you're saying it isn't over, right? March 2020 to now. He is saying the exact opposite of what he said at the bottom. Is this too much? Is it accurate? I'm not sure. So now that we understand where the market is and that there are people on both sides, now we're going to look at a few more things to get a little bit more of a technical perspective. So now we're going to look at the weekly chart. Why was 390 my line in the sand for the bulls this week? Well, let's read it here. It says, weekly higher low, June 10th gap. So what's our low from last week? 388.42. We got 388.78. Whoa, that's like really close. That's within 0.1%. Correct. And it's actually 389.75. What you're going to note here is the green number, which corresponds with the green line. That is where we have our gap. The low, 389.75. The close, 389.8. those levels are going to be particularly important going into tomorrow. We don't quite have a bearish engulfing candle, but it's pretty nasty. It's not bullish at all. And it looks like the NASDAQ actually dragged us down more today. We're still really synced up here. 390 on SPY, 291 on QQQ. So really, 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 really notable. Where we close tomorrow is going to dictate whether or not we're going to actually save this weekly uptrend as well. We got to get back above 394 to save it. And for next week, we got to be at roughly 397 to save it. So we got to rally up by roughly 2% by the end of next week to save this. 1% tomorrow as well. The dollar, as of right now, it's set for a record weekly close. Sorry, not a record, right, 52-week high. I have to go back to like the 1980s for this. Something else I wanted to mention here as well is just the VIX. And the reason why the VIX is important is because when we're over 25, there's a daily implied move of 1.25%. If we take the S&P and the NASDAQ, add them together, divide them by 2, it's roughly 1.25%. What's so unusual about this, though, is that with these massive declines, oil down 4, gold down 2, that's odd. Bitcoin down 2, Ethereum was down as much as 10, Apple down, Microsoft down. Only one that's not down is Tesla. But what I want to focus on here is actually two things. Why? Because we're often talking about options this week. So what does the options tell us? Well, the put-call ratio for SPY actually took a 20% plunge today, which means that there were more calls transacting than puts. Ah, interesting. When yesterday we were at 177, which means that there's roughly 2 times as many puts transacting as calls. Then we look at CPC, which is the put-call ratio for the broader market, and it's here at 1.18, which means that there is 1.18 puts bought for every call. Why is this so important? It's important for me because it shows that maybe we're going to get the classic cuck going into Opex. And what I'm referring to is what I'm going to show now. So when I look here at the options chain, I'm not sure this will happen, but something that really tells me that we're going to get an oversized move higher is we will see one side called in. Overnight, we'll see one side called in. So what I will be watching for, and I'm actually going to save the screenshot for tomorrow, is what happens to these open interests. Do they get bigger? Do they get smaller? And what would be very, very, very telling for me is that this whole thing here zeroes out. Again, I don't know if it's going to zero out. For me, that would just signify that the bull case gets a lot stronger. If on the flip side, we see these calls getting zeroed out, that's equally as strong of a signal for the bears because they're like, man, screw it, just get me out. So I'm really going to be paying close attention to whether or not these zero out. It's like 50-50 when it happens, like meaning sometimes it does, sometimes it doesn't, but it would only be visible tomorrow pre-market, which means I will be going over that on our pre-market stream. If you want to learn more about that, click on the link in the description if you want to join us. Next thing I would note here is that it's just gushing puts. It's gushing, right? There's puts, there's puts, there's puts. But the put-call ratio for the S&P tells us that there's actually more calls transacting than puts. There is so many options trading on here. And what's really interesting is if we look at S&P closing at roughly 390, we still have about $2 in premium. 390, but we're really here in after hours. What are we at here in after hours? Let me just double check because it's going to change the number here. 390.5. So we'll just average out the two. 390 put is worth about 270. 390 call is worth about 2. So call it about 250, 240. So that means that we have to be 240 below 390 to get their money back. 390 minus 2.5. You have to be at 387.5. What is that? It's exactly what I talked about on the weekend. That is a weekly lower low. We're going to lose that 388.4. So if we lose that 388.4 and we close there, because these things only get paid if we are there at 4 o'clock tomorrow, woof, all right, that's a nail in the coffin. And it could self-fulfill because all this big, smart money is all on one side of the trade. So this options chain is very telling for me. I don't know who's going to win. There's so much volume, like I said before. So who's going to get paid? Drop me a comment. I love all of your feedback, all of your comments, even the ones that are a little bit negative towards me. I don't mind. My feelings do not get hurt. All right, so now we understand the context. We understand the options. Now let's look at a few more cool tools. We'll wrap up with a couple of charts, and then we'll see you tomorrow for our end of day live stream for the final hour, which I think will be particularly spicy. All right, so now we're going to look at a couple of things here. I'm looking at our algo platform. Again, click on the link in the description if you want to find out more. We're going to be doing an official launch shortly. So looking here at the options, what I noticed that for today, meaning just for today, for the broader market, for orders over $100,000, it is 0.6 put to call ratio, which means that 62% of options today were bought as calls and 38% were puts. There's a little bit of a skew here because Starbucks had about $40 million in premium, but we're taking the number as it is. Bulls bought about 2 times as much as bears. Now here's the really interesting part. We're going to look at SPY and QQQ, or the Qs. And as we look at this one here, we note that, it's also bullish flow. Why? Oh my goodness. Whoa. So let's sort this by premium. And this is very unusual. Why? It's just unusual. I've been doing this long enough that I know. So when we look here, whoa, almost every order is bullish. Yeah, 80% of flow is bull. That's 4 times more than the puts. This is what I was trying to show you when we were talking about the put-call ratio. For the S&P specifically, it's down by 20%. Why? Well, look what they were buying. They weren't buying puts. All right, we click on puts. We can see what they're actually buying. It's not a whole bunch today. Largest order is 200,000, and it's mostly on SPY. And these are going to be for October end of month, October monthly. That one's for next week. It's nothing for tomorrow. So really interesting. And as we look forward here to the next thing I want to look at, we're now going to clear this out and look at week to date. So week to date, it's about 50-50. Yeah, so it's about 50-50. And I'm going to leave that there. I don't think there's much more to talk about. You can click on this tab here if you want. There's a lot more information on the stocks tab. But now let's do one more thing, which Mason actually called out. So we're going to look here at ARK. So going through the list here, right? VIX up, 2-year up. It's currently at 2.85. We got the 10-year note at 3.5. We got that 4.5% number from Dalio, right? We got a number. Let me go to my proper chart here. Let me just make sure I am... Oh, I got to talk about this too. I forgot about this. I'm sorry. I want the video to be short, but I want to make sure I'm not missing any context. So yesterday I was also talking about there was bullish engulfing candles. So every time we dipped down, it ripped up and formed a bullish engulfing candle. I'm going to flip this to pink so it's a little bit easier to see. Bullish engulfing. Over here we also have a bullish engulfing. What happened today though? Oh, crap. We don't have a bullish engulfing at all. Well, we do. Sorry. Right here, when we got those numbers out, right? Let's go to a 30-minute chart, actually. Because we got those numbers out today at about 8:30, so numbers come out, bullish engulfing, but then what happened after? It actually turned into a hourly bearish engulfing. So we bull engulf into this hour right here, and then immediately on the next hour, what do we do? Oh, crap. Bear engulf, right? That's a notable change. That did not happen yesterday. It happened now. So I was talking about how we were going down, we were going sideways, and now we're resuming down. That's the path of least resistance right now. And that's what appears like we want to go. The question is overnight, is there going to be a resolution? Is there going to be some reason for us to get bullish? Is there just going to be options motivation to burn? Or is it something else? Really, really, really important into tomorrow. All right, now we go here to our... We also had Adobe having a $20 billion acquisition today, earnings after the bell. Anyways, looking at gold. Gold is now below its 200 weekly. And what's so interesting about this is that if we go here to a log scale and we zoom out, this is the classic... can I zoom out a little bit more? Let me go like this. This is the classic pattern we were looking at where we're watching for a massive pot and handle where we come back down and test the 200 average, which is where the blue line is here. So with the blue line pointing to the 200 MA, let's look really close. Didn't touch it here. Here, we're touching it and below it. So we're starting a new pattern. Either it's delayed or maybe it's not going to happen. People don't even want gold in their port. All right, that's not a good look. If gold is not doing well, why should stocks do well? I don't know. Ethereum finished its merge? Man, sell it. That's what the consensus was today. Sell it. Bearish engulfing candle. 1989, 1950, yeah, bearish engulfing candle, right back to support, right back to our 2018, 2017 high. Same thing for Bitcoin here. Right back to the high, right around 19.8, 19.9. Not in bearish engulfing yet, though. The last thing I want to look at is like, why is ARK green? ARK is green, healthcare is green, and financials are green. So as we look here to ARK, what's unusual about it? Again, this is my psychology chart, blah, blah, blah. We're talking about weekly lower lows. So why the hell is ARK green on the week? Even after we saw the, right, what was it? Roblox had some bad user numbers, whatever. Higher high, higher low. Whoa. It's actually green versus last week after it went up massively. Yeah. It's up like 2% today, even with the sell into the close. Whoa, what's going on here? Again, this is what I suspect, not that I know. The only reason why I could see ARK being up this much, this big, today into tomorrow, is because this is the most shorted this is the most shorted sector. And if they're caught offside and they need to unwind their shorts before they're going to pump the hell out of QQQ and SPY tomorrow, they better make sure they do ARK first. That's the only reason I can think that ARK is up today. So what I'd be looking for would be immediate follow through tomorrow. Because we've already cracked the 390 area on SPY, we can't afford to stall out here at all. If we stall out, we're probably going down. So what I mean by stalling out is I need to see, again, need, not want, I need to see that we are going up. I need to see that we are back above the green line. That's 394. I pretty much have to see a daily higher high. What is that? That's 396 tomorrow. So if we can get to 396, we're re-entering the gap. Otherwise, what does it look like? Oh no, don't tell me. There's a massive hole here to go where? Down to 380.54. The path of least resistance right now is for us to fall down into this wedge here into the end of September, which is seasonally the worst month of the year. And if we're going to avoid it, we have to hold the low tomorrow. It is our weekly low. It is a gap low. We cannot afford to go down anymore. And because we're closing at the low of the day, if we are not able to get steam immediately, or if we gap down, we have to pump up and we have to reclaim the low. I don't know how we're going to win tomorrow. But with that said, I provided the base case, which is bearish. I provided you the bull case, which is not as strong, but is still there. And we will be there for the final hour tomorrow. So please just go to the channel if you haven't already, subscribe, and we will come back tomorrow to walk you through for the final hour. So tomorrow, there will be a video scheduled here shortly, and we'll be through for the final hour for you. If not, I encourage you to watch the video here that'll queue up, which goes through our weekend prep in terms of how we got here and where we are going. Thanks so much for watching, and I look forward to seeing you tomorrow. Thank you.